So where is the economy? Is it slowing down as much as some indicators suggest?
Yeah, the data today, as you mentioned, David, was a bit worse than expected. And what was particularly surprising is that the services sector, which has been holding up not only the US economy, but also the European economy, was showing a little bit more sign of weakness. And combining that also with the housing data being a little bit weaker, it is clear that there are some signs, at least now in the services sector, that things are slowing. Housing has been slowing for a while, but it looks like Fed rate hikes, combined, of course, with the situation in Europe on the energy front, are beginning to have at least somewhat of a moderating impact on growth.
So that was going to be my question. Is it too soon to know whether, in fact, the Fed is starting to have the effect that it seeks, which is slowing down the economy some, particularly to get at inflation?
Yeah, that's really important because I mean, obviously, with in the US and Europe, inflation is essentially 8%. And when the target for the ECB and the Fed is 2%, it's very clear that both the ECB and the Fed are trying to get that very high number, 8%, down to 2. And that does require tighter financial conditions, and that can either come through higher short-term interest rates or higher long-term interest rates, but it can also come through wider credit spreads or lower stock prices. The challenge for the Fed more recently is that stock prices have been going up in the last 4 or 5 weeks. The same thing you also have seen for credit spreads have also been rallying. So in that sense, more may be needed to be done in short rates. But the good news, if you will, from a Fed perspective, is that there are some signs now that the economy is, at least on some fronts, beginning to slow down, and that's exactly the goal that they're trying to achieve.